Good afternoon. This is Tom Alexander. It is Sunday, November 12th. It is about 4:33 p.m. in beautiful Savannah, Georgia. And we've had an interesting 2 weeks. The last 2 weeks have basically been straight up with the exception of last Tuesday and Wednesday. And we got a little bit of two-sided trade there, but not a whole lot. Now, the market condition has not changed from last weekend's report. It's basically dead vertical. The market, the SPX, the Dow, and the NDX are all up at rates of change that are unsustainable. And naturally, the Russell is doing its own thing, is confounding, but it's been confounding for a year since the top last October, October before this one, 13 months ago. So let's take a look at the charts and talk about this thing, okay? I'm going to start with the SPX. And let me show you my charts. Okay, so I am not in the camp that is constantly trying to pick tops and bottoms using the magic number game of specifically Fibonacci stuff. Could this thing stop at some Fibonacci retracement up in here? Yeah, and it will within a few points, but because there's so damn many of them. You can always find a Fibonacci projection for the market to head to. Okay, so I don't find that helpful. So what I try to do is identify levels of previous trade and typically try to find volumes, a cluster of volume or cluster of previous highs, because those are auction market levels. Those are levels that have been established by buyers and sellers, actual market activity. And the farther you go back in time, the more difficult that is, frankly, because there is sort of a time on previous trade activity. Now, I think we're still in that window because the most recent high was back in towards the end of July. But as you can see on my screen here, we're only about 4.25% from that high. So could we stop somewhere in here and form a significant top? Yes. But if we do, there will be signs that that is potentially a top of importance. So I'm not going to sweat it as a trader, worrying about if we're going to hit a 62% retracement, a 78.6% retracement, or a 1.236 extension of some lines. Okay, you don't have to do that. The most important level down to the downside includes last week's low and then this gap in the SPX. All right, let's take a look at the NDX. Now, the NDX is absolutely about as vertical as even it gets, but it's only about 2.5% from a new all-time high. Do I think that it will trade 2.5% higher before it retraces and has more balance? I don't think so, but it's the NDX, so it certainly could. Okay, let's look at the Dow. And the Dow is about a little less than 4% to a new all-time high. And again, you have the downside level is last week's low that included the Dow must close this gap. And then the Russell, of course, which is the confounder, it's 2,000 stocks. It is considered to be a better barometer of overall health in the economy because it's 2,000 stocks. And everything was in sync until the Russell topped on a dime and then deeply retraced this ramp range. Now it's sort of in the middle of nowhere, so I'm not going to worry about what the Russell's doing. Now, if we do, to make a bullish case, okay, I can make a very bullish case here for the market going forward. And that's if breadth expands from here again dramatically and then Russell rips off to the upside. If that happens, you're not going to see the SPX and NDX come in at all, or much, if at all. Okay, let's take a look at what I want to look at. Let's look at the profile view. All right, this is the SPX profile view of the market. And each profile unit you see here is 1 month of trade. I have August and September combined into 1 month. There's a volume cluster up here around 4,500. But this is the November auction has started off extraordinarily vertical to the upside. I'd be a little bit surprised if it were to just slice through this 4,500 area without some sort of retracement. Okay, let's look at the internals. And I mentioned, that's not the one I want to show. Well, I didn't post this in the report on the website. By the way, it would be very helpful if you find value in this, if you would like it, if you would subscribe, if you'd make comments. I'm happy to respond to any comments. Okay, VIX. I didn't talk about VIX, but since we landed on it, we'll talk about it. Well, VIX basically crashed over the past 10 days or so from this high. It is now approaching lower levels that it has reached over the past year or so, but it can go a lot lower. So yeah, there's nothing here that is bell ringing in particular. Okay, moving over to breadth. Now this chart, the red is a 10-day moving average of NYSE advancing issues, the green a 5-day moving average of advancing issues, and the blue histogram is breadth. It's NYSE closing breadth. We had 4 consecutive days of negative breadth last week, and really only 1 day of down price activity, and that was Thursday. And then Friday we gapped up and went straight up again. Now, the 5-day moving average, and I talked about this in the report last weekend, the 5-day moving average did halt the market temporarily, and we rotated around that price for a few days. Now, based on this view, I would not be surprised to see higher highs above Friday's high, even if we retrace a little bit into Friday's range, as you set up a series of divergences prior to something more significant to the downside. Now I want to show you a chart that I feel like is, at least for me, this is really my favorite view, particularly when you're seeing a whole lot of momentum both up and down. And the lower panel is breadth. The upper panel is the SPX. This is a 30-minute chart. This is extraordinary momentum. And what you have down here, you have this lower level. And in a bull trend, when the market reaches down here, it will rally almost without fail. In a bull trend, okay? So eventually you're going to get down here and the market doesn't rally and it takes out a lower low, and that would be a signal of a more more significant top relative to anything that we've seen since we formed the last top weeks ago. But now what we have, and this is typical, this is what you want to see. You want to see divergences like this. Now, is this a divergence? Yeah, this is a very significant divergence, but it does not at all mean that we don't gap up this evening and trade higher Monday. But what you typically will get, you'll get a series of higher highs, then you'll get retracements like this. You'll have breadth come down into this level, then you'll do this number. I mean, this can go on, guys. This can go on for weeks before there's a significant top. But if you go back and you look at previous rallies. All right, here's one. So let's just talk about it for just a minute. All right, so this was a ripping rally off of this low. And you can see you made a series of higher highs all the way up into, really up into right here. And then you finally took this higher low out, and that formed a short-term top. But you can see here, you would come down here, then you would make a momentum peak, and then you'd rally a little bit on less breadth. You would come down here, you'd make another momentum peak, you'd go sideways to have some retracement. And that's the process that I think that we're in now. And I wish there were a way for me to tell you how much retracement or sideways activity you're going to get, or sideways activity that includes retracement, how much that retracement might be, but it varies. All I'll say is about that is that, we've seen very little price retracement. I mean, this is sort of the minimal that you're looking for, and it will occur even if we're up big into Monday noon. Then you need to start looking for some sort of retracement of 0.5% or something, and that's a pattern that will that can continue. Again, it can continue for days or even weeks. And eventually you'll get a deeper retracement, and then you will have a higher low taken out. Right now, the higher low is right here. Now, incidentally, we still have all these gaps that are a sign of enthusiastic buying. When you have gap after gap after gap, eventually those later gaps tend to be filled prior to the rally resuming. So we'll see if that plays out next week. You guys enjoy the rest of your weekend. I will see a lot of you in the live room tomorrow. The rest of you, check for updates. By the way, there is a written report with these charts at alexandertrading.com. Weekend updates. It's free. Check it out. Thank you.